This is Chartbusters. Good day so far for the markets. I'm Mangalam Maloo. Joining me shortly will be Nigel D'Souza. But we're talking about earnings. One of the stocks of yesterday was Godrej Consumer, a big mover. Strong earnings coming in, the stock at a record high as well. So we have with us the CFO of the company joining in, Aasif Malbari, to discuss the numbers gone by, but more importantly, the outlook ahead as well. The stock currently slightly muted, taking some profit after a big move that we saw yesterday. Aasif, thank you so much for joining in. Now, there's weakness in the consumption environment, which you have alluded to earlier as well. And in that, you've delivered better than expected numbers and better growth than peers as well. Where do you see this headed? And what kind of volume recovery can we expect in the near future?
So firstly, thanks for having me on the show. I think in the given context, if you've seen our numbers, we've delivered a good set of numbers in terms of a balanced set of numbers on the top line and a strong set of numbers on the bottom line. Going forward, we do see a gradual improvement coming through in the market environment. It is looking like a benign inflationary scenario, and we hence see a gradual kind of improvement will come through in consumption. But specifically, when we look at our categories, some of our categories are doing well. If you look at categories like air care, if you look at categories like liquid detergents, they are doing well. We've been growing double digit on those. There has been a little bit of slow growth in some categories, and with some of our recent interventions in terms of new product launches, we do see an improved performance going forward.
Right. What's your outlook for Indonesia, Africa and LATAM? Is the worst of currency impact behind?
So in Indonesia, there has been a lot of structural improvements which the teams have kind of done in that market. And this was the third quarter of very strong, close to double-digit volume growth, which has been delivered. We're hoping that Indonesia will sustain at higher than the GDP growth in that country for a while. So we're quite bullish in terms of the performance in Indonesia going forward. As far as the rest of the markets go, which is Africa and LATAM, there is likely to be some volatility in exchange rates, which is going to continue. In some country or the other, we've seen some volatility in Argentina exchange rates, in Nigeria. We're quite conscious of this. And our focus there is to ensure that on one hand, we drive the underlying volume growth, which means we do kind of keep expanding our business in these markets, and that's best reflected in underlying volume growth. And at the same time, we drive the INR EBITDA absolute growth. Yeah? And that is something, again, we're quite confident of doing with various structural actions. There will be some volatility in terms of exchange rates, and hence the optics of the reporting could kind of get impacted in the medium term, where we may see some kind of USG variability. But that's something which really doesn't kind of bother the value creation.
All right, Aasif, what's your quarterly run rate aspiration for Raymond? How much of the synergies have you already realized, and how much more can be realized, and what is the impact on margins?
So I think Raymond has kind of done well. The original business case which we drawn out for ourselves is actually kind of bearing fruit. There were two parts of it. The first one was in terms of ensuring that we deliver the synergies. The synergies have all been secured. We've kind of delivered around 2/3 of the cost base as synergy benefits, and that has kind of started flowing into the bottom line. That was reflected on our EBITDA margins last quarter. So we're quite happy with the way things have shaped up. We've also delivered, the integration has been completed. So it's now completely moved into our dealer network. It's kind of, we've been able to simplify the portfolio and make it much sharper. So all of those actions are now behind us. In terms of the run rate, the sales will only kind of keep moving up from here on. And we do see double-digit growth on this portfolio going forward.
Well, double-digit was always on the cards. What kind of overall EBITDA margin guidance can you give us? Because structurally, the margins for Raymond's consumer care business is going higher. You said that raw material inflation and the environment is benign right now. So can we see margins move higher from here on, and how much?
Yeah, so wouldn't get on to giving a guidance, but we are quite confident that the growth in our margin, EBITDAs will be ahead of our volume growth. there are certain projects which we are working on to kind of strengthen the margin profiles, and hence ensuring that profit growth stays ahead of overall revenue growth, and we keep improving margins for the next 2 to 3 years, is something which we're working through with robust plans.
Got that, Aasif, but do you have a target margin band in mind for you that you aspire to get? And also, how much beyond that would be spent in advertising as well as brand building?
So I think we really don't kind of take a benchmark in terms of consolidated margins, because that's really not how things kind of stack up. What's happening is that we have been driving a significantly improved mix. So parts of our portfolio which are significantly better in terms of margins, countries which are significantly better in terms of margins, have been growing almost at a 2x of parts of a portfolio which are lower than the average. That has been giving us a significantly improved mix. And that should sustain for a while, because these are multi-years growth journeys. And that's actually kind of resulting in an improved margin profile. So really no guidance in terms of what is the benchmark we want to get into at a consolidated level, because it's a sum of parts. But yeah, and in addition to that, there is a large simplification journey. We've called out that we do expect to deliver around 400 bips improvement from our simplification journey. We have come around 40% in that journey. There are certain projects which are still there in terms of simplification of the supply chain, of business models, and that should kind of result in an improved margin profile going forward.
All right, Aasif, thanks a lot so much for joining in and giving us all those data points for your numbers. The outlook of 400 basis point simplification, you've already realized 40% of that. So, the street will expect some more to come by in margins and the double-digit volume aspiration that you have as well. Thank you for joining in with